When it comes to real estate financing, a zero down payment mortgage allows first-time homebuyers and repeat homebuyers to purchase property with no money required at closing. That is aside from the standard closing costs. With that being said, there's always been a debate on whether or not it's possible to get a home loan with no down payment, which is essentially buying a house without having to come up with a lot of upfront cash. So that's why in this video, I'll share how to buy a house with $0 down. And if you stay until the end, I'll reveal the truth on what investors don't actually tell you when it comes to financing a new investment property. If you haven't already subscribed to the channel, we post videos every week on rental property investing and topics just like this, so definitely keep watching. Now, obviously, when it comes to buying real estate and financing loans, there are several different options out there, and they all have their own set of advantages and disadvantages. When we talk about zero down mortgages, there are other options including the FHA Loan, the HomeReady Mortgage, USDA Loan that offers low down payment options starting at 3% down. Mortgage insurance premiums typically accompany low and no down payment mortgages, but that isn't always the case. Furthermore, at the time of this video, mortgage rates are still low. Rates for 30-year loans, 15-year loans, and 5-year mortgages are historically cheap, which has lowered the monthly cost of owning a home. But can you buy a house with no money down? If you want to buy a house with no money, there are two big expenses you'll need to avoid: the down payment and closing costs. This may be possible if you qualify for a zero down mortgage or a home buyer's assistance program. 5 strategies to buy a house with no money include: Number 1, apply for a zero down VA loan or USDA loan. Number 2, use down payment assistance to cover the down payment. Number 3, ask for a down payment gift from a family member. Number 4, get the lender to pay your closing costs, also known as lender credits. Number 5, get the seller to pay your closing costs, also known as seller concessions. If you combine any of them, these tactics could put you in a new home with $0 out of pocket. Or you might get your down payment covered, and then you'd only need to pay closing costs out of pocket, which could reduce your cash requirements by thousands of dollars. No matter what budget you fall under, I've compiled a list of mortgage loans with down payments ranging from 10% down to as low as 0 down, where you learn everything you need. But please do us a favor and give this video a thumbs up, so this topic can be spread to more people. Now here's an example for first-time homebuyer loans with 0 down. There are just 2 major loan programs with 0 down: the USDA Loan and the VA Loan. Both are available to first-time homebuyers and repeat buyers alike, but they have special eligibility requirements to qualify. No down payment USDA loans are 100% financing. The U.S. Department of Agriculture offers a 100% financing mortgage. The program is known as a Rural Housing Loan or simply USDA Loan. The good news about the USDA is that it's available to buyers in suburban neighborhoods too. The USDA goal is to help low to moderate income homebuyers wherever they may be. Many borrowers using USDA loan program make a good living and reside in neighborhoods that don't meet the traditional definition of a rural area. Some key benefits of the USDA loan are no down payment requirement, no maximum home purchase price, below market interest rates, the upfront guarantee fee can be added to the loan balance at closing, monthly mortgage insurance fees are cheaper. Just be aware that USDA enforces income limits. Your household income must be near or below the median for your area. Another key benefit is that USDA mortgage rates are often lower than rates for comparable low or no down payment mortgages. Financing a home via USDA can be the lowest cost path to home ownership. Next will be no down payment VA loans, which are 100% financing as well. The VA loan is a no down payment mortgage available to members of the U.S. military, veterans, and surviving spouses. VA loans are backed by the U.S. Department of Veteran Affairs. That means they have lower rates and easier requirements for borrowers who meet VA mortgage guidelines. VA loan qualifications are straightforward. Most veterans, active duty service members, and discharged service personnel are eligible for the VA program. In addition, homebuyers who have spent at least 6 years in the reserves or National Guard are eligible, as are spouses of service members killed in the line of duty. Some key benefits of the VA loan are no down payment requirement, flexible credit score minimums, below market mortgage rates, less strict requirements. No mortgage insurance, only a one-time funding fee which can be included in the loan amount. In addition, VA loans have no maximum loan amounts. It's possible to get a VA loan above current conforming loan limits as long as you have strong enough credit and you can afford the payments. The next category of loans will be for low down payment first home buyer loans. Not everyone will qualify for a zero down mortgage, but it may still be possible to buy a house with no money down by choosing a low down payment mortgage and using an assistance program to cover your upfront costs. If you want to go this route, here are a few of the best low money down mortgages to consider. Low down payment FHA loans, which are 3.5% down. The FHA mortgage is a bit of a catch-22 because the Federal Housing Administration doesn't actually lend money. Rather, the FHA sets basic lending requirements and ensures these loans once they're made. The loans themselves are offered by nearly all private mortgage lenders. The FHA mortgage guidelines are famous for their liberal approach to credit scores and down payments. They will typically insure home loans for borrowers with low credit scores, so long as there's a reasonable explanation for the low FICO. They also allow a down payment of just 3.5% in all US markets with the exception of a few FHA-approved condos. Other benefits of an FHA loan are your down payment may come entirely from gift funds or down payment assistance. The minimum credit score is 500 with a 10% down payment or 580 with a 3.5% down payment. Upfront mortgage insurance premiums can be included in the loan amount. Furthermore, this loan can sometimes help homeowners who have experienced recent short sales, foreclosures, or bankruptcies. Note that if you want to use this type of loan, the home being purchased must be your primary residence. This program isn't intended for vacation homes or investment properties. Another low down payment loan would be the HomeReady Mortgage, starting at 3% down. The HomeReady Mortgage is special among today's low and no down payment mortgages. Backed by Fannie Mae and available for nearly every U.S. lender, the HomeReady Mortgage offers below market mortgage rates, reduced private mortgage insurance or PMI costs, and innovative underwriting for lower income home buyers. Using HomeReady, the income of everyone living in the home can be used to get mortgage qualified and approved. For example, if you are a homeowner living with your parents and your parents earn an income, you can use their income to help you qualify. The HomeReady program also lets you use border income to help qualify, and you can use income from a non-zoned rental unit too, even if you're paid in cash. HomeReady home loans were designed to help multi-generational households get approved for mortgage financing. However, the program can be used by anyone in a qualifying area or who meets household income requirements. Freddie Mac offers a similar program called Home Possible, which is also worth a look. Home Possible is a little less flexible about income qualification than HomeReady, but it offers similar benefits, including a minimum 3% down payment. Another good low down payment loan to consider is the Piggy loan, which is 10% down. One final option if you want to put less than 20% down on a house, but don't want to pay mortgage insurance is a piggyback loan. The piggyback loan, also called the 80-10-10 program, is typically reserved for buyers with above average credit scores. It's actually two loans, meant to give home buyers added flexibility and lower overall payments. The beauty of the 80-10-10 is its structure. With an 80-10-10 loan, buyers bring a 10% down payment to closing. They also get a 10% second mortgage. This leaves an 80% mortgage loan. Since you're effectively putting 20% down, there's no private mortgage insurance. Here are answers to some of the most frequently asked questions about mortgage down payments. What is the minimum down payment for a mortgage? The minimum down payment varies by mortgage program. VA and USDA loans allow zero down payment. Conventional loans start at 3% down, and FHA loans require at least 3.5% down. You are free to contribute more than the minimum down payment amount if you want. What credit score do I need to buy a house with no money down? The No Money Down USDA loan program typically requires a credit score of at least 640. Another no money down mortgage, the VA loan allows credit scores as low as 580 to 620. But you must be a veteran or service member to qualify. What are down payment assistance programs? Down payment assistance programs are available to home buyers nationwide, and many first-time home buyers are eligible. DPA can come in the form of a home buyer grant or a loan that covers your down payment and or closing costs. Programs vary by state, so be sure to ask your mortgage lender which program you may be eligible for. What are the benefits of putting more money down? Just as there are benefits to low and no money down mortgages, there are benefits to putting more money down on a home purchase. For example, more money down means a smaller loan amount, which reduces your monthly mortgage payment. Additionally, if your loan requires mortgage insurance with more money down, your mortgage insurance will be removed in fewer years. If I make a low down payment, do I pay mortgage insurance? Mortgage insurance is typically required with less than 20% down, but not always. For example, the VA home loan program doesn't require mortgage insurance, so making a low down payment won't matter. Conversely, FHA and USDA loans always require mortgage insurance. So even with large down payments, you'll have a monthly MI charge. The only loan for which your down payment amount affects your mortgage insurance is the conventional mortgage. The smaller your down payment, the higher your monthly PMI. However, once your home has 20% equity, you'll be eligible to have your PMI removed. If I make a low down payment, what are my lender fees? Lender fees are typically determined as a percentage of your loan amount. For instance, the loan origination fee might be 1% of your mortgage balance. The bigger your down payment, the lower your loan amount will be. So putting more money down can help lower your lender fees, but you'll still have to bring more cash to the closing table in the form of a down payment. Just let me know in the comments if you plan to take advantage of any of these programs to buy a new home in this coming year, and don't forget to subscribe to the channel so you don't miss our next video on this topic. For even more ways to learn how to buy a rental property with no money down, watch this video next, where I will share exactly what steps you need to take to get approved. I'll see you in the next one.